It is 12 minutes past 10 in the morning on Thursday, the 4th of June. It's pretty overcast here in London today. I'm just sipping my coffee in my small flat here in Kensington. And on the line, I've got Sam Volkering for today's market broadcast. And in today's market broadcast, we'll be talking about a rather more optimistic idea that I think many of us and many of you listening to this have been dreaming about with the lockdowns, which is when we'll be able to drink again at a pub. Now, Sam, you've been somewhat ahead of the curve when it comes to the investing side of this. When it comes to pubs reopening and the share prices recovering very heavily. Of course, the pub sector has been hit very hard by the lockdown. You know, it's a pretty low margin business, all things considered. Many of these pub chains have an awful lot of debt on their books, and so a lockdown is really one of the worst things that can happen. But on the prospects that this we may be able to get a recovery, and people may be able to go back to their favorite boozer and knock a few back. Some of these shares have really performed. So Marston's, I believe, has doubled very recently in price. It was a massive, pretty much overnight gain it was a huge percentage. And it's not even that tiny a company, all things considered, right, Sam?
Yeah, exactly. I mean, when we look, you wind back to March, right? Okay, so wind back to, I think it was the 20th of March. I think that was a Friday, the 20th of March, when the government, or the days before, the government said on Friday the 20th of March, we're going to, enforce that all pubs need to be shut down because of the coronavirus and all that sort of thing. And from there on in, it was just horrific for pub stocks, and rightly so, because, like you say, one of the worst things possible for a business that requires people to be inside it is for no people to be allowed to be inside it. So when lockdown happened and pubs shut, your local Weatherspoons wasn't open, your local Young's or Nicholson's or, Marston's pub or whatever it might be, all of them shut. No people, no sales, no beer sales, no food sales, nothing. And if you're a business that has no customers and no money, that's really not good for your performance. And so all the pub stocks, yeah, rightly so, smashed to smithereens, but really smashed unfairly. Well, not unfairly, smashed appropriately, but then it created an opportunity, because when you look at something like this coronavirus crisis and what it's done to industry like hospitality, it's not like we're not going to come out of all of this. We're already starting to come out of the coronavirus, and there's we could have a whole nother podcast on issues of lockdown and the data and modeling and all those sorts of things. But the fact is that this is not going to cripple us forever. So pubs will reopen. We will be able to go back and have a pint, have a meal, do all the things that you used to do at the pub beforehand. And so while a lot of the pub stocks were severely beaten down, if you take a very long view on where that entire industry is going to head, I couldn't see how investors were not looking at every single pub stock on the UK markets and just salivating at the potential, not of a pint when we come out of all of this, but of the potential upside that all of these kinds of stocks delivered. So it's like, I was sitting here and I'm like, oh, I'd love to have a pint down at my local pub. But then I'm also like, oh my God, I'd love to have some stock in these companies, because this is ridiculous how cheap they are trading at right now. And it's almost a bit of a no-brainer, really, because once you dig deeper into the companies, and like you said, a lot of them carry debt. Weatherspoons carries a truckload of debt. You've got to understand how that debt cycles through, what kind of business they are. Then you have to look through and understand what their lending partners do, what covenants they've got. Have they been extended? Have they been given, if they're leasing pubs, have they been given rent relief? All these, there's a lot of intricacies within each of them as to how they weather this storm. But when you go through and you find out that actually they'll be okay, the potential upside to a lot of these, to what they were trading at before this crisis kicked off, I mean, it's a plethora of opportunity, in my view. And I've said, I've been writing about it and talking about it for a while. because I just see it as one of the most exciting. I didn't think I'd ever really be so excited about pub stocks until this crisis hit, and now I think it's just bonkers.
Right. I always thought it was well. I always thought. I mean, I thought one of the tragedies that was the few people were remarking on during the lockdown was the vast quantities of beer that would be going stale within pubs because there's obviously just nobody to drink it.
Yeah.
And when you look at a pub like Wetherspoons or a pub chain like Wetherspoons, this is one of the companies that stands arguably to weather the storm the most because they have the most such a big and storied credit history already with lenders, right? I mean, they've got the scale and they've got the relationship already with the credit market to borrow and to be able to weather the storm so much. But then even in that context, it's £1.5 billion in debt. I don't know the maturity profile for all of those loans, but on aggregate, £1.5 billion. And it's a 3% margin business, right? It's such a, when you think of it, it's such a tough business to be in during a period when there is complete lockdown. You could have 50% capacity within the pub. Even if there's sort of a relaxed lockdown, relaxed lockdown rules, and you still would not be breaking even on that. I mean, it's really, it just seems like such a tough business, especially for the small independent places.
Yeah, so there's a couple of facets to the industry which have been changing over time, and I've witnessed this in the pub and hospitality industry in Australia for a number of years. And the UK market actually somewhat lagged the Aussie pubs and hospitality market in this sense. Is that what happened in Australia a number of years ago is that pubs realised that they can't just operate as boozers; they can't just sell alcohol. The margins are so thin that it's just not a viable business. And so what you found is that a lot of them converted to what a lot of people now refer to as these gastro pubs, right? So they offer more food services with the fact that they also happen to be pubs as well. And so it's become more of an almost restaurant experience in a lot of them. And so the UK market's gone through that transition period over probably about the last, well, really sort of since 2009. And that's just started to sort of pay out dividends in the last year, and that's really started to finally get traction. And I know that just before this crisis kicked off late last year, I think it was to about the middle of last year, there was actually a net gain in the number of pubs that existed in the UK. So since 2009, the number of pubs in the UK had been in decline. And for the first time since then, about middle of last year, there was a net gain. So there were more pubs than there were the previous year. So the industry has sort of turned this corner. And I think a lot of that had been consolidation. So small independents that were just boozers failing, unable to convert to more higher margin products and menu items like these gastropubs tend to do. And so then as well, what we find is that the industry was kind of getting to this point where it had finally kind of found its footing again. And then the coronavirus kicked off and just threw all that into the bin. And so now, while independents had been struggling, there'd been some consolidation, but then they'd started to come back a bit. Independents now, through this period, I'm certain there'll be a reduction in the number of independent pubs operating out there. And so what you were talking about with the Marston's deal sort of emphasizes that, is because Marston's price skyrocketed the other week is because they basically are merging with Carlsberg UK. So Marston's and Carlsberg UK are going to create this mega brewer and pub group. So that's going to consolidate the industry further. It's going to make it a lot harder for independents to operate in territories where there are Marston's pubs. And so I think there will be further consolidation of the industry in that sense, which means that some of these stocks like JD, Wetherspoons, Fuller Smith and Turner, Young's, Marston's, they're going to have a more dominant position in the market. And people can, moan and groan about the death of the independent pub and all of that. And it is a shame, don't get me wrong, but you also can't really change that fact. So as an investor, you've got to look at this market and go, well, okay, what can I and can't I do about the entire industry? Well, I can't do anything about the entire industry, but I can certainly invest in the companies that are involved in it that are going to be the dominant players going forward. And so when you start to take a more, I guess, cold but calculated approach to what's happening in the industry, the way it's transitioned and changed and the opportunities going forward, there is, and obviously off the back of the coronavirus crisis and lockdowns and us coming out the back of that, the potential upside to a lot of these stocks is pretty crazy. And I wrote about this last week in Exponential Investor, and I've just got it up here on my screen. So I'm just going to run through some of the figures that I had, and this was as at when did I write this? Last Friday, the 29th of May. So from where they were trading last Friday to where they had been trading at the start of this year, so before the coronavirus crisis really kicked off, the upside for JD Wetherspoon was about 39.8%. Fuller Smith and Turner, the upside potential was about 35.9%. The upside potential for Young & Co. was about 42.9%. The upside for Marston's, even after they just about doubled in price the week before, the upside potential was 93%. And then other smaller listed pub groups like Mitchell and Butlers, the potential upside there was 134%, and City Pub Group was 159% potential upside. And that's changed in the last week. But even after they've bounced off those mid-March lows, there's still a lot of money on the table, I think, once these pub groups return to normal. And I'm of the view that they will be returning to normal in the next sort of 12 months.
When you say potential upside, is that just using the a return to normality? What that percentage would be? Yeah.
Yeah, if you scratch out basically everything that happened from January onwards, and you take a look at where these stocks were trading in normal conditions to where they are now, there's a gap there. And if you think that we're going to go back into lockdown and that we'll never be able to go to a pub again, then this is probably the worst industry in the world. But I'm not of that view. I'm of the view that we will be able to go back to the pub. These pubs will end up with more people coming through the door because the industry will consolidate. And I think that there's a real big opportunity in these kinds of stocks going forward. And then as well, you've also got to consider that it's not necessarily just about, there will be a bit of change to how we interact with pubs going forward. And JD Wetherspoon is actually a bit of a leader in this, believe it or not, in terms of, I don't know if you've ever used their ordering app in one of their pubs.
Oh yeah, how it's going.
It's fantastic, right?
Yeah, it's ahead of its time.
It is ahead of its time, and it's been in operation for a couple of years now. And I know in January they even rolled out, I think it was January, and they rolled out within the app you could build your own breakfast. And that's kind of an indication of where these pub groups are heading in terms of you'll be able to order at a table through your app. So you'll never really need to go to the bar. You'll be able to order your drinks, build your own menu, build your own food, or build your own breakfast, like in Wetherspoon's case. So you will kind of be able to interact with them in a more efficient way anyway. There's nothing worse than going to the bar on a Friday night and, waiting 20 minutes to try and catch the eye of the bartender to try and get served. Just order it through the app, get it delivered to your table, super easy. And, most of these pubs now off the back of this are going to have to use some sort of app like Wetherspoons. In fact, I was reading the other day that they're probably going to be using an app that is based off of the Wetherspoons app. If not, I wouldn't be surprised if Wetherspoons white label and license it out to a number of different pub groups. So, there's other opportunities and potential for these pubs to be better with their margins. They may end up employing less people, which is a downside to all this, but that's not necessarily their fault. I blame the government, but that's another discussion for another day. Right. But they could be improving margins with the implementation of new technologies and how people order and interact with them. And footfall in and out. If you're improving the number of people that can come in and out because you're more efficient in how you serve them, I see that as upside potential to a lot of these companies.
Yeah, I hadn't thought of that before. The that Wetherspoons ordering app. I've used it loads of times. I've marveled at it, at the fact that none of the other pubs in the country are doing anything similar to it. And it seems relatively simple to use. Of course, I'm not I'm not technically minded, but it does seem like this does seem like just sort of a almost sort of natural evolution of having a mobile phone is you'd be able to do that.
The first time I ever used it, so I went into a Wetherspoons pub and I didn't have the app, and I can't remember why, but I think I sat down at a table and I was on my own and it was pretty busy and I didn't want to lose my table. And I also didn't want to leave my stuff at the table because I have my little laptop and everything in it, right? So I'm in this sort of tricky predicament where I don't want to leave my stuff at the table to go to the bar to order in a busy pub. And I also don't want to necessarily leave my table to lose my table to go to the bar to order as well. And so I was like, this is going to be fun. And then I saw on the table, download our new ordering app. So while I sat there, within a couple of minutes, I downloaded the app. I'd ordered my food, paid for it, and then 5 minutes, or not even 5 minutes later, about 2 minutes later, the beer comes, and then my food comes when it's ready. And I was amazed at how easy and how good that was for a company like Wetherspoons. Now, Wetherspoons doesn't carry the greatest reputation in the world, but that app and that ordering app, I was like, why is no one else doing this at this quality, at this level? So, I mean, there are other aspects to these operations that I think once they employ them and roll them out, people will really start to see that, and it'll help with their bottom line as well. I think the potential that pubs have got to innovate and develop and implement technology going forward. I know BrewDog, they're not a public company, but they've got a similar thing, and I use theirs as well. Again, crazy easy, order through the app, pay, beer comes pretty much straight away, and your food comes when it's ready. I mean, this is what pub ordering is going to be like in the future.
Yeah, I hadn't actually thought of the app in the context of the when the reopening happens, but it seems for the people who are still very worried about catching COVID-19 and who want to avoid it. I mean, the last thing we want to do is to be elbowing each other at the bar trying to order a pint and whatnot, and ordering it through an app would seem to be sort of the more safe route when it comes to that. I think I agree with your thesis that that there is going to be a lot of consolidation. I think it's tragic, all the amount of all of the small and independent pubs that are going to suffer as a result of it. But it does seem inevitable. There's just going to be for in the near term, there's going to be a big centralization of power effectively within the pub industry in the UK, simply from the amount of the small ones that are going to go bust, and the larger companies that have access to credit that are going to be able to stay afloat. I think for me, what sort of tempers the case, or cools it down slightly, is simply because the lockdowns left so many people unemployed in this country. Is there going to be that same consumer spending and people going to the pub quite so much? When so many people are earning less, and it's true that when people are feeling down on the luck, they do go to the pub a bit more. But just in terms of the amount of spending power that the common man has, whether or not that will translate into better profits for the pubs.
I'm not sure it will necessarily make things drastically worse for them. I don't necessarily think it will necessarily make it drastically better for them either. You do get some. So again, not to harp on Wetherspoons too much, but they have a very target demographic with their prices and their menus and the prices on their menus. So they kind of hit that niche pretty well. And I would expect that if the recession becomes very deep or gets even to a depression, which I don't think will go depressionary, but there'll be a recession for a few quarters at least. They probably come out of it okay. It's some of those ones that operate, I guess, more almost bar style pubs that might start to struggle a bit. When you can go into JD Wetherspoons and get a pint for £3.50, or you can go into a Marston's and get a pint for £3.50. I think in a recession, that's probably not going to change that much in terms of the footfall that comes through. Like you said, it may even increase the footfall that comes through to the pub. But then, you're not necessarily going to go and spend 30 quid, or 8 quid on a Sauvignon Blanc and a fancy Wagyu burger necessarily in one of the more sort of gastro style pubs. So there will be slight changes to that in a recession, but I think in recessionary periods, pubs actually probably aren't too bad an industry to look at for investment. I mean, would I buy a pub? No. But would I invest in pub stocks? Yeah, I probably would.
Yeah, it does feel like a relatively sort of counter-cyclical kind of play, because when economies turn down, people do enjoy going to the pub a bit more. I've always felt like, as you say, Wetherspoons does come with a kind of there does come with something of a bad reputation. But
Mm.
my own experience, I've always felt that Wetherspoons is really quite a noble enterprise. I mean, it's incredibly affordable. They're all over the country, and the range of beer that they always offer is very, very broad. So wherever you go, pretty much in the UK, there's probably a Wetherspoons there. You can probably get, and there's always an affordable pint that you can get of from many different breweries. It's always felt like it's kind of a noble enterprise, and it's always giving the common man a decent drink. And it'll be very interesting to see how it goes forward. I mean, of course, it did get hit very hard in March, as we say. It's a low margin business with a very high amount of debt. But it'll be very interesting to see how it goes. As the lockdown easing sort of is introduced. And as you say, markets are always forward looking, so they're always trying to anticipate that. So it'll be interesting to see if we get a big spike in Wetherspoons.
Yeah, I mean, these all of the pubs have bounced off those lows in March, because I think the market realised that with everything that had been going on, there was a real risk that a lot of them may have gone out of business. But then once the announcements started flowing through that they'd either raised some capital or cut costs, discretionary costs where they could, and then they'd negotiated with their lenders that the covenants are being pushed out, and some of their longer form debt that wasn't due to mature for 2, 3, 4 years. Once the market started to get a hold of the actual financial position of these companies and that they'd been all shored up, then they started to go, actually, well, maybe the reaction here has been a bit harsh, and so they've bounced since then. And then more has come through, as we said, like the Marston's deal, where they're working on this merger with Carlsberg UK. Again, sending the stock price skyrocketing from there. And so they're all working through this and have worked through this. And they are showing now that as we come out of this lockdown and things are eased and restrictions are relaxed, that maybe they've all been done a bit too harshly, and so that the road out of this for them isn't quite as devastating as it looked like it could have been in mid-March. So I think it's not a bad area for investors to really be having a much closer look at, even from here. Like I said before, while a lot of them have bounced, and a lot of them have bounced really, really hard from that mid-March lows, I still don't think that it's too late. The sorts of where they are now to, as I said, where they were before this coronavirus. And, there's no guarantee they're going to get back to there. But you have to think in normal trading conditions where we're not, forced to isolate and be 2 meters away from each other, and we can use apps to order with ease and to pay for all those sorts of things. You'd have to seriously consider that under normal trading conditions, the picture can't be too dissimilar to where they all were in January, which was just a few months ago.
On that note, actually, so with the Marston's deal, that was with Carlsberg UK.
Yeah.
Have you? I assume you've taken a look at the Carlsberg stock itself. The one listed in Copenhagen, and that's priced in krona and whatnot. I was interested to see that's it's recovered an awful lot since that March low, and it's only about 10% off its January February highs. Have you taken a look at that? I mean, it's generally a bit too big for it's too large a company for the kind that you would generally be recommending to your readers. But I'd be interested to know your take on that.
Yeah, I mean, I've looked at it. I don't place too much focus on companies that size, like Diageo and Carlsberg and Heineken. Actually, just on Heineken, you mentioned earlier about kegs going off. Heineken have said that any keg that has expired its use-by date during this period, they will replace for free. So you also get companies like them that are doing the right thing by their customers, and that's not going to. I mean, Heineken can wear that, whereas some of these smaller pub groups can't necessarily wear having to replace all that kind of stock. So there are some good things that come out of this as well. And I imagine, I'm not sure about other brewers like the ones that Asahi own, like Grolsch and Peroni and all those sorts of things, but Heineken is sort of leading the way with that sort of thing as well. But nonetheless, those are bigger pub groups and brewers that again they've all somewhat weathered this storm. And while they're a bit big for what we sort of look at to recommend in my advisory services, they somewhat lead the way in terms of looking at where the potential is for these, for that industry and the stocks in that industry to what their future kind of holds.
Very good, Sam. I think we'll tie it off there for today. It is looking like a relatively bright future for booze, as we put it. But thank you for the listeners for sort of indulging us in this very long conversation on pubs, which myself and Sam clearly have a lot of.
I'm very passionate about pubs, Boaz.
Yeah, a lot of appreciation for. But that sums up today's market broadcast. Sam, thank you very much for joining me.
Thank you.
We'll be back again tomorrow. If you are interested in following me on Twitter, my handle is @FederalXS. But I shall be back, as I say, tomorrow, and we'll be back again next week as well. See you later.